Hello, everyone. It's Try here with the third episode of Try's World. I just wanted to hop on. I haven't recorded another episode for a while now. It's been obviously very busy with everything that's been going on um, with year end and also start of this year. And so I did want to talk about some market stuff, some fun things as far as sports in Sacramento and what's been going on there. It is Try's World after all, so I just speak on what I think I know a lot about and what I find interesting, current events and things that's kind of on my mind. We've had extreme market volatility so far this year. I mean, that's an understatement. We've seen dramatic drops in the market, dramatic rises in the market, and it's been quiet after a 90-day pause in the threats of what most would call onerous and impossible tariffs. And so this is what I was speaking of in my previous podcast about tariffs beforehand, is there's different levels of tariffs. I don't think anybody anticipated how high of tariffs would be implemented. And the extreme level of it was shocking, I think, to the business community, and markets responded in kind. Do believe that some of that was valuation related, but some of it was policy related. It was what I spoke about in my previous podcast. Whichever administration was in, I think the bluster over tariffs and loving tariffs, extreme levels of tariffs. I think Buffett went on and did speak about it. Just tariffs in and of itself is then what? And that's always the question is, you get these tariffs, you implement them at a high level, you get payback, but then what happens after that? And I think every good leader, every good CEO, every good manager of a business should be able to set the proper expectations, good and bad. So yes, we get payback, but we also risk a trade war. And that was what I was hoping that leadership would speak about, is both sides of the coin. And unfortunately, we only got one side. And it's, of course, the popular side, which we're going to hit them with tariffs and be tough. We're tough people, rah, rah. And then what happened is we end up kind of hurting ourselves. And I think it's even the staunchest supporters of the policies had to kind of backtrack. And so now we're on this 90-day pause, which I believe gives countries the opportunity to come to the table and start negotiating a deal. And that's what this current administration is hoping will happen, is we'll start getting deals with countries after that scare, which was completely unnecessary in my view. And so what we have now are jittered markets, retirees looking at their accounts and just wondering what in the world happened. Drawing, a lot of retirees draw on their accounts and now they got to draw at lower levels, right? So I think it was completely unnecessary. We really hurt ourselves, and now we're trying to dig out of it. We're saving face. Scott Bessent came out and was like, hey, this was the plan the whole time. Obviously wasn't. There was a lot of, people don't realize that, and I replied to Bill Ackman's tweet, but he completely lost faith in the policy. And he was the staunchest supporter of this administration before the administration was selected. And so it was one of his tweets that suggested this 90-day pause. And for some reason, no media outlet really picked up on it. But that's why we have these type of outlets, so that people can sort of speak truth and provide it unfiltered. That 90-day pause was a Bill Ackman suggestion. And Bill Ackman, if the audience is not privy, is a hedge fund manager, and he's manages a lot of money. It doesn't mean he's doing all that well with that money, but he's not doing bad. And he's been very outspoken against Harvard, his alma mater, and what they've been doing to stop anti-Semitism. So he's been very influential in the administration, and I think people aren't, for whatever reason, paying attention to that. And he has just as much sway as I think Elon or anybody else in the administration. So that's where that idea came from, and it gives countries the opportunity to come to the table. It also gives the administration the time to kind of think about, hey, do we want what just happened to happen again? I don't think we do. But regardless, I did post a video a while back, Warren, talking about managers, whether you're a good manager, whether you're a bad manager. If you're with a good business, you're managing a good business, the business will tend to carry the day, as in the business will continue to do decent even if you have horrific management. And I think, and I'm not saying anything about the current management, but if people were worried about the way things are getting managed, my view is, hey, if you're contributing to your 401k, if you're contributing to a stock portfolio in any way, now's not the time to panic and sell. There's an AAII survey that's essentially a survey of individual investors, and it's at an all-time high as far as bearishness in the last, I don't know, 5-10 years, something like that. So investors are not feeling good. I mean, this is the very people that voted for this administration. And I'm obviously in the investing business, and I've read a lot of annual reports. And I said this on my podcast, my previous podcast. A lot of people are worried, and this is businesses of all sizes, not just large companies. They're your Main Street businesses. They're businesses all over the country, in the Midwest, in the Northeast, in the South, all over the country, big and small, that are worried, rightfully so, of the level of tariffs because of the potential for retaliation and a full-fledged trade war, which has unknown consequences. And I'm shocked at the amount of leaders that I think we wanted to kind of welcome the new administration, but I think everybody wrongfully concluded that the tariffs couldn't go as high as they have, and the threats would never go as high as they have. But this is what's shocking is that it was promised, it was delivered, and now all these high-profile business leaders are speaking out now. And I don't know if that was an attempt to sort of appease initially and then say something, but the blowback against these policies has been shocking. That part is actually not shocking. It was shocking that we were so accepting of threats of 50% plus tariffs. I think most business leaders would look at that and say, look, ultimately, who pays those tariffs? So, I mean, consumers pay the tariffs, but consumers pay the higher costs typically for autos, for steel, whatever it is that's getting taxed. Consumers pay that ultimately. Businesses may eat some of it, but businesses have to stay alive and have a certain profit margin. So they will raise prices, and they will have, and they're going to have to stay profitable. And so ultimately, this will get passed on to consumers. They may eat some of it, but I think the consumers are going to have to pay the big part of that. And then everybody's been complaining about inflation. Well, this makes inflation worse. And so you're seeing the price of gold, for example, increasing a lot, which gold, if you think about it, has no really intrinsic value as far as cash flows. It doesn't produce any cash flows. It has no usability outside of the fact that you're scared. So it's a fear gauge, and that went off the charts. Bond yields were doing funny things that ultimately worried and rattled markets and market watchers and portfolio managers, people in the investment community were watching this and were rightfully worried. And so it's my hope that cooler heads will prevail, and I think it will. As far as the individual investor is concerned, if you have an investment program, which I have recommended, and a lot of people that I admire have recommended, is you are consistently contributing to your investment program, whatever it is, your 401k, your stock portfolio, whatever allocation you have as far as stocks and investments. And so every paycheck, 10%, you're contributing. So I would continue that. I wouldn't stop it now. It's a bad time to in my view, it's a bad time to either sell and get out. And it's also a bad time to stop your investment program, whatever it was. So if you were contributing a certain amount of your paycheck every month or every 2 weeks, every paycheck, whatever it is, keep that going. Keep that going. Now, if you wanted to reallocate, let's just say, first of all, it should be long-term funds. You shouldn't need the money. If you're retired and you're invested, you probably should have a different allocation than 100% stocks. But where yields are nowadays, it makes it pretty easy for investors to simply invest in a treasury bill on treasurydirect.gov, on Merrill Edge. Warren Buffett's Berkshire Hathaway, his meeting will be live streamed this Saturday, if you want to check that out. And it's always worth watching. It's recorded. You can watch it after the fact. But I always learn something. He in recent years, he stayed away from talking about anything political simply because he doesn't want to hurt the people in his subsidiaries or his businesses. But he may talk about specific policies. He may expand on tariffs a little more and what he meant by certain things. But it is a treat. Warren is 95, 96. We're not going to have these too many more meetings with him at the helm. And he's cut the meeting short, or a little shorter this year. He's going to end it at one. And he's progressively done that over the years simply because I think he's acknowledging that he's getting older, especially after his longtime friend and dear partner in his business, Vice Chairman Charlie Munger, passed. He realized his own mortality, and I think he took it a lot more seriously. And I think that's the change that I've noticed in Warren Buffett specifically. But this weekend he'll be live streaming his annual meeting, which is a blast. If you've never been, I've been once. I want to go one more time. Was at the second to last one where Charlie and Warren were at the meeting. So it was incredible. I mean, I had a great time, and I've actually been to Charlie Munger's meeting at Wesco. It was Wesco at the time in Pasadena, and so I've been to one of his meetings where he led the charge. And he was always so generous with his knowledge. He would give away just certain ideas that he liked. Not give away, but he would just talk freely, at least back in the day, about certain ideas that he liked, and he would also teach, but it was, you kind of miss that candor that Charlie brings to the table, and he's actually less candid in that sense in terms of investment ideas, themes that he likes at the annual meeting, because Warren runs that show. So speaking of annual meetings, annual letters, in Warren's most recent annual letter, and I would check it out if I were you, he does recommend, as a really small in italics, Bill Gates' source code, his book Source Code. And you may not agree with certain things about Bill Gates, but he's still a leader as far as technology. He seems to have a good grasp of where things are going as far as technology is concerned. So if you get a chance, check out Source Code. I thought it was great. I read it, and he has a lot of great things to say. Elon sort of had a book that was written as well, his biography by Walter Isaacson, and he's also, I guess, what you consider a tech leader. And so, to have Bill Gates produce one now, I think is nice. It's a nice counterbalance to some of Elon's viewpoints. So, and I'm not talking politics. It's just they're two different people. Bill's more software. Elon's more like cars and robotics and spaceships, things of that nature. So, and so as far as markets, I would just say keep with your program. Don't panic. Obviously, if people saw what was going on and they sold everything, and then they try to rebuy based on whatever policy is going to happen, which nobody knows that. So I wouldn't try to get ahead of a policy that's getting produced and hoping that you can respond in time. It's just it's tricky because markets they're what I call a discounting mechanism. I don't call it that. That's what they are. They incorporate information in the future into stock prices today. Here's what's really concerning me right now in the financial media. Everybody's talking about, almost universally now, I can't see the future. I can't predict the future. I think that's worrisome. I mean, and I'm going to go back to the stock discounting thing, because whatever we think in the future is reflected in prices today. And so I keep saying this, and it's people are always looking in hindsight and saying, oh, I knew that. A lot of people didn't ahead of time. And it's the same thing here. A lot of people are saying, I can't see clearly. I'm going to wait till things clear up. Why that may be a mistake is because once things clear up, it's too late. As in, if there is worry in the market, if there's worry at all, it'll be reflected in today's prices. So if you're worried about the future, if you're worried about, let's say, people keep talking about the possibility of a recession or something like that, that's going to be reflected in today's stock prices. So the less enthusiastic investors are about the future, the more that's going to be reflected today. I would be very careful thinking that you can time the market. That's the best way to say it. And I watched Jim Cramer I'm not a big fan of Mad Money. It's not against Jim Cramer, but he had a 20-year anniversary whole celebration thing today. And his justification, and I don't hate on Jim. I think he's whatever. I mean, he kind of poo-pooed on people who he said gray-haired people. I have no gray hairs, but I do. You can't see them, but he poo-pooed on gray-haired people and indexing. And so he's like, well, people are going to do it anyway, so that's why they like my show. I talk about stocks. I have the whatever. I have the gumption and the courage to talk about stocks. I stick my neck out there. I get chopped off sometimes. I don't listen to him. I don't listen to his stock ideas. I think it's wild to be able to take calls just on a whim and say buy or sell on a whim. And I guess they have a whole legal team or something like that. And there's this whole disclosure about at the beginning of the show and things like that. And he has to disclose if his charity trust holds it. I think his talent is media. I mean, he's very good in the media. He likes to put on a show, and he puts on quite a show. But I think he's wrong to poo-poo on indexing. I just think it wouldn't produce as many views and clicks. His whole show is based on generating excitement. And that's why I don't want to put out a lot of podcasts, because that's not how I get paid. That's not how I gain followers. I'm skeptical when people say, they don't, Jim has the money. He doesn't, and I know he does, but it's like, he doesn't need the show. Well, I don't know. I think he probably makes quite a bit on the show. I think he wants to help people too, but you got to take everything with a grain of salt in terms of his interest. In order for his show to be successful, and you can't deny this, is to make waves, is to be really loud, be really entertaining. You have to entertain. And I mean, part of my podcast, I do have to keep it entertaining as well and engaging in order to keep an audience. It's not like I don't want any audience, but you have to understand my interests are aligned with investors. I mean, in terms of I don't have a show or a need to build this massive following and get sponsors and things of that nature. The success of a show, if anything, is antithetical to great investment results. Why? As soon as I announce and say a stock idea, it bids up the price of that stock. Again, it's a discounting mechanism. So as soon as I say XYZ stock, and obviously I'm not going to say it, and I think it's good, you should be skeptical, because it's like, well, why don't you buy it yourself, right? I mean, I just told you a stock I think is good, and unless I'm completely invested in it and I can't buy anymore, why would I tell you my idea? And it's like, it doesn't even make sense, number one. And two, it is liability, and he has a bunch of attorneys that the show pays for. But the point is, to announce an idea and to say buy this, sell this, it actually bids up the price of a stock. It unduly depresses the stock. There's people nowadays who make their money on that. Short sellers will sit there and publish an article, and the stock will crash, and then they make a ton of money and they cover their shorts and they're good. So the media nowadays, you could do things to really manipulate things and turn things a certain way. And so I'm not accusing Jim of benefiting from any of that. It's just more like, for a show to be that successful for 20 years and for you to be basically like a celebrity, you do have to do certain things. You have to be an entertainer. And I think that is what it is. It's entertainment. What I would caution against is that's not the most effective way to make money. And I think that's honest. That's trying to help viewers and followers. I know, and I've seen it from individual investors, and this most recent episode, and I've been talking about it, should be a reminder. It's dangerous to pick stocks. I talked about certain themes that people are talking about, and I got so worried. That's the impetus behind this podcast, is to counter what's out there, because I don't think it's helping you. It's not helping you. If it's about making money, you should index. So, I mean, and it's boring. The problem with indexing is it's boring. Why? It's because you're just putting your money in an S&P 500 index every 2 weeks, or every time you get a paycheck for the rest of your life, and you'll beat probably 99% of investors out there, including professional. And it's one of those things that's like, but you're not going to go to a cocktail party and say, hey, guess what my S&P 500 index? Nobody's going to talk to you. It's not sexy. It's really not sexy. But if it is about making money, that is your best bet to make money and keep your share of the S&P 500. And anybody who promises anything different, you should be very skeptical. And I think that's honest. So that's just my aside on what the financial media is saying nowadays. I've seen many business leaders say, hey, look, I can't plan. I can't do certain things. I can't make capital expenditures. I can't do certain things until I see clarity. Like, why would I build a factory somewhere or do certain things to my supply chain if I don't have clarity? I mean, to bring a supply chain back to the United States is extremely time consuming. It's extremely expensive. So I have to think about that. If there are rollbacks on certain tariffs, which the administration is doing right now. They're trying to uncompound certain tariffs, right? So automakers maybe get a break on the steel tariffs and aluminum tariffs or whatever it is. It's so confusing, and it's this mentality of break it first and then fix it later. And I think that's Elon's mentality. And I'm going to speak on Elon now because he's not going to spend as much time in Doge, so I don't find him to be a political figure anymore. But as from a business standpoint, okay, he did the same thing with Twitter. And what did that do for Twitter? And that also is a lesson, is to stay in your circle of competence. I mean, what was he good at? Rockets, cars, engineering, that type of stuff. Great. Social media, maybe not so great, but does it give you incredible power, the ability to connect with people, things like that, and control the dialogue, even, sway political elections? Absolutely. So, but as far as I'm talking about from a business standpoint, he really hurt. I mean, there was an article, banks just sold off all their loans they made on it, and they were breathed a sigh of relief to get 98 cents on the dollar. Okay. And they probably should, because the way it was getting managed and the way he was speaking to advertisers, it's like, oh, I don't give a hoot about you, this and that. And I think it worried the banks. I'm just talking about, again, a business standpoint, because like I said, Elon is now making a graceful exit from what it seems like from Doge. And perhaps he should. Perhaps he should to focus more on business. Perhaps many business people should. I get the mentality. Make the mistake, roll it back later. Break it, then roll it back. Fire a bunch of people, then rehire them if you need them. And it's like, it's chaotic, right? It's one of those things where, I think if it works one place, whatever, Twitter, it's not going to necessarily work with the federal workforce. It's not going to necessarily work with tariffs and a world economy. Because the problem with breaking things and then going back and trying to fix it is if you don't know what you're breaking and you break it too much, you may lose a lot of credibility. And I guess people can applaud them for trying, but there is a certain amount of credibility that you lose. It's not about, hey, I'm imperfect, so I do this and that. It's taking calculated risks. And I think, if anything, part of it is you wanna make sure, I think as a leader, doctors take the Hippocratic Oath in terms of do no harm. You're operating on a patient. Now, this is not a patient, so you could take a little bit more risk than perhaps a physician whose life depends on that physician. But there's a certain sense of responsibility you have when you're making a decision. The people on the receiving end, if they're going to be hurt, because right now you're just seeing it in the stock market. Eventually, it stocks being a discounting mechanism. The results begin to show in the real economy. So, for example, in 2008, 2009, and I'm not saying that this is the episode that we're in, the economy obviously was in a recession, and then like 2 years later, it began to show up in the real economy. Markets hit an all-time low in like 2009, March of 2009, for the last, 15, 20 years, and then you begin to see it in the real economy. So what Bill Ackman was trying to do is, before the tariffs take effect, please put them on hold so we can think a little bit. So if we need to roll something back, we roll it back. But it gives you time to think. It's not just for the trading partners to come through and make a deal, but it's for the administration to take some time to think about, is what just happened what we want to happen? And for the people who aren't really privy to what's going on in the financial markets, there were some really worrisome signs. And I think people don't realize how much of brinkmanship is being played, how much risk is being taken right now. Because when you start seeing certain signs in the market, it's not good. It's not good. So the hope is that right now, at least, we didn't do too much damage. We can backtrack a little bit. But besides that, for the everyday investor, though, you don't want to let your fears overtake everything. You cannot let fear overtake everything. You won't have a successful investment program if you let your fears get to you. And what I'm seeing, at least based on what I see, is a lot of fear. And that's usually good for stock prices, right? So politics aside, from a business standpoint, from an investment standpoint, if people are worried, if people are uncertain about the future, that makes for better stock prices today. I'm not saying it's like a great time to buy and something like that, or I'm not calling a bottom, is what I'm saying, but the more things decline, the better value they typically are. And I'm not saying to jump into certain things because they've dropped 30 or 40 or 50%. I'm talking about a diversified portfolio in an S&P 500 index fund. You're going to want to continue that program. And I think even 401ks have gotten so complex. There's so many products out there that it is worth talking about. At least when I worked at the companies that I worked at, very large companies, I think, yeah, you had access to like a financial advisor and things like that, or a financial planner to walk through your expenses and things like that. But for the everyday investing menu, there's not someone there to sit there and advise you. That's why I'm recommending people look through their portfolios, make sure you're not in active funds, make sure you're in index funds. If you're in a bond fund, it's the same thing. There's index bond funds that just buy the whole ag. I think I said, in my view, given my age and given my, I guess you can call it risk profile, I would be fine with 100% in the S&P 500 index. But everybody's different. Everybody handles volatility different. Everybody's not, if you're thinking you're going to tap into it at some point in the near future, the next 3 to 5 years, you shouldn't be 100% in equities. You shouldn't be 100% in equities. But if you're young, if you're okay with the volatility, if you tested yourself, like times like this, if you stopped your investment program, you probably shouldn't be 100% in stocks. And this is a great time to reassess and look at yourself in the mirror and say, can I actually handle that type of volatility? Am I comfortable with that? If you're not, then you may want to change your allocation to fit your tolerance for the volatility in stocks. This period is a reminder that stocks are volatile. This is what, I hate to say it, but this is what stocks do. It's been a lot more unusual than it typically is, but it is a reminder that stocks aren't this thing that always does this up in a steady manner. It does this. It's everywhere. And so this is a great reminder of it. I think, I hope my viewers at least didn't sell in a huffy and out of fear. I did post a video. Sometimes when I can't get on and speak at length, sometimes I'll post some things that when I post that video of Warren saying, hey, I believe in the U.S. economy long term. So keep with the investment programs. Even bad managers can't ruin the economy, right? If you believe that we have a bad manager currently, let's just say, or a bad CEO or a bad president or whatever it is, okay? If you think we have a good president, then you definitely shouldn't sell, right? But and if you think we're going the right direction with tariffs, you definitely shouldn't sell. If you think we're going the wrong direction with tariffs or whatever it is, don't make rash decisions. That's what I would say. Other stuff not related to markets, just I guess Sacramento, the Kings wrapped up their season. I thought it went well, given how deep the West is. I think for people who are looking at the Kings and they're like, oh, first round exit against the Mavs, and then the Mavs got beat by Memphis, and then you can keep going, and then Memphis got beat by OKC, and it's like Memphis almost beat the Warriors. The Warriors were the 7th seed. This is with Jimmy Butler. Memphis was the 8th seed, and they were the 2 seed, probably 2-3 seed in the recent past. This is how good the West is. Kevin Durant didn't even make the playoffs. That is how good the West is. I think whoever wins the West this year will win it all. That's my hot take. I think the Celtics are great. But the West is tough. It's tough. And I just, the Claw is back. Look at how he's playing. He won for Toronto. I mean, think about these players who have won it for their team. Jokic, 3-time MVP. Claw's back. James Harden. And so the last time the Kings made the playoffs, KD was not in the West. James Harden was not in the West. The Claw was injured. I think Braun might have been injured. So when we talk about how the Kings have performed, you do have to take into account how everybody else has performed. And I don't like how our writers there's a local writer from The Athletic who keeps writing weird stuff about DeMontis not wanting to be on the team. Like, nobody, as Kings fans, we hear that all the time. Mitch Richmond cried when he got traded to the Kings. Chris Webber was not happy when he got traded to the Kings. There was that whole saga with the Maloofs where they wanted to move the team for a long time. So it's like, we're used to people not wanting to be here. This is not some epiphany. What we found, though, is once teams start winning, they like Sacramento. They tend to like Sacramento. Or they don't mind it. Chris Webber ended up not minding it. Mitch Richmond never really made it really as deep as Chris Webber did. So I don't know if Mitch's experience was as good. But Sacramento's changed, too. I mean, think about our location in between San Francisco, in between Lake Tahoe. And it's not just a stop anymore. I think you got a lot of the Bay out here now. And that's why Sacramento, the market itself, is so expensive. I mean, it's still got California weather. It's a little hot because it's in the valley. But I think I saw a Lou Williams podcast where he was like, oh, yeah, there's nothing out there. I think he was talking about Arco. Yeah, there was nothing around Arco. But even if you go out to North Natomas now, it's pretty developed. But now the arena is in the middle of downtown. Doko's, Golden One's gotten some pretty good reviews in Forbes, things like that. So I would say to the NBA players, ex-NBA players who think they're all that and a bag of chips out there talking just because they played in the NBA, get updated with what's going on around the league. I mean, fly out here, check out Golden One. I mean, look at Doko. It's very impressive in my view. And so you're getting players like DeMar wanting to come here. Zach got traded here, but he wants to stay. So I thought they had a very decent season for the division that they're in. The Western Conference is tough. You got LeBron and Luka now who are struggling with the Timberwolves. And they'll probably be eliminated by the Timberwolves. But you got Ant. He's a star. He's a stud. His three-point shot looks crazy. His drive looks insane. He's got this hezzy now with his head jerks back because I think his legs are so strong and he's just diving to the hoop. He's like Dwayne Wade with the jumper, with the 3-point jumper. And he learned that jumper from his hero KD and Steph. This past summer, because I never remembered him shooting that 3-point shot as well as he does, and he's a two-way player. So you've got these players in the West, and it's tough. And so for the Kings to have made it that far, I mean, you're talking about Ja Morant, who got 8th seed. It's just like, it's unbelievable, the level of talent in the West. And so look out Celtics. I mean, I really do think my hot take is I can't see a lot of teams beating OKC. But I do think the Warriors, it could be a rematch between the Warriors and the Celtics. I think if it's Warriors-Celtics, Warriors will take it. OKC's still very young, but OKC is a tough team. I mean, I just, if they stay healthy, if they stay together as they have been, I would not be surprised, I'm not saying they will, if Shea gets his first championship. Because that team is ridiculous on both sides of the ball. And I've seen them play, and they're suffocating on the defensive end. And then on the offensive end, Hartenstein, Chet, Jalen, even Lou Dort's out there hitting threes. And then we got Shea, who's just, he is athletic. I don't think people realize how athletic he is, but he is really athletic. I think his parents were athletes as well. But he doesn't make mistakes out there. He plays really solid basketball. It's just when it gets really, really physical and things like that against a Draymond or a Jimmy Butler, I don't know. It's a toss-up between, in my view, OKC and the Warriors. And then depending on who makes it, I just think whoever comes out of the West is going to win it. The West is that good this year. And so, and the Celtics, as much as good as they are, I'm not seeing the same fire this year. The Cavs, as good as they are, they're still too young, in my view. I think the Celtics can get past the Cavs. And that's the funny thing, though. The Kings were beating the Cavs pretty handily. They were beating the Rockets. So you see flashes of potential in the Kings. And if you look at, in the West, the top teams, I don't think there's one top Western Conference team that had as much movement in their top players than the Kings did. Okay, so you have to take that into account. When Jimmy Butler got traded, that's one player. I mean, their stars, their main stars are still Steph. It was always Steph, Dre, and Clay. So they replaced Clay with Jimmy. That's just one piece, okay? On the Kings, it was Fox, okay? And then DeMar's a little newer. He's a lot newer. I mean, that's a year. DeMontis. So now it's just DeMontis. And actually DeRozan wasn't even there. So you're incorporating all these pieces. Now you got Zach. You throw in Zach LaVine in there. And then so you've got a lot of talent. I think the Kings are undersized based on what I see. I'm a little skeptical about the Warriors just because they just kind of put that team together. But they've been actually building that bench for so long now, and they've been getting all these pieces for so long now that they have the elements of a championship team. It's just this is their first year together mid-season. So I could see that at some point unraveling. And the reason why I say that is because I saw them against Memphis. And Memphis almost beat them. And if Ja had not gotten injured, which he always seems to get injured, I think Memphis could have beat the Warriors. And you saw what happened to Memphis and OKC. So I think if OKC plays anybody at this point, and just because they haven't won, I really do think this could be Shea's year. So that's my hot take as far as basketball is concerned. As far as baseball is concerned, the Athletics are coming to town. I got reminded about it when I saw that walk-off offer. There was this walk-off offer. I did get tickets. They sold out real quick. The good ones. They sold out super quick. But I bought some. thankfully. And so I'll be going to one of the games. I'll be going to a couple games actually. And I kind of leveled up on my A's gear. And I kind of posted about that. If you want to check out where to get that Sacramento patch, I did post where you can get that because they're very hard to find. And I've been reading things. I guess Carmichael Dave wrote a article in the Sacramento Bee about how we shouldn't have even taken the team. I mean, this is an insult. It's kind of like the bad employee who goes to this company. We shouldn't let him at our company. And it's like, that's John Fisher, the owner of the A's. And it's like, we shouldn't let him in our city. It's a bad look. Why did Vivek have the nerve to do that? It's going to make Sacramento look bad as an MLB market. And I'm thinking to myself, I've lived a lot of places. I've lived all over the country. It is really rare to live in a city that has an MLB team. And I'm always so used to seeing MLB. Like I was watching the A's today on the local broadcast, and I'm thinking, gosh, that seems so far away and just distant. I'm always used to thinking about basketball. And even in my post about the A's patch, I'm talking about the Kings. It's just, we're a basketball town. So it's always been that way. But at least my friends growing up, I played 1 year Little League. My friends, I had a lot of friends that loved baseball growing up. So I was thinking to myself, how can we not be an MLB town as well? And so I think there's some debate on, okay, this could be a trial run for us as a city to eventually bring a Major League Baseball. I'm not even thinking that far. I'm thinking right now. Like the Yankees are coming to Sacramento. The Yankees. It's like the iconic Yankees. Aaron Judge, the pinstripe uniforms, so much history. And to think that they're going to come to Sacramento and play a Major League Baseball game, they didn't even go to San Francisco, by the way. This is a treat. I think it's a treat. So me, selfishly, as a sports fanatic, I'm like, this is awesome, because after the Kings season, I'm just used to like not rooting for any teams. Now I have a team to root for, even though they're going to be here temporarily. I just root for anybody who's in the city, and I've never had a baseball team. Everybody kind of roots for Bay Area teams, but I've always viewed that market as a little bit different. And so if I had to adopt a team, sure, it'd be the Niners and the Giants because they're close by. And whatever Bay Area teams, but I always took a special pride in the Kings because they're in the city. So to have the A's in the city is the first time I bought actually a cap, a baseball cap, and it was so foreign to me because I'm used. When you go to basketball games, you don't really need to wear a baseball cap. But you go to a baseball game, it might be sunny. The baseball players wear it, so you're in uniform as well, and you're showing your fandom at the same time. And so it makes a lot of sense to actually wear a baseball cap now. And so I bought a fitted baseball cap for the first time ever. And I bought, a couple actually, because they have the Sacramento patch and I want to keep it forever. I don't know if I want to even wear it. So I'm kidding, I'll wear it. But the point is, it's exciting times for sports in Sacramento. I was watching the NFL draft a lot this year because Notre Dame had made it so far. I think they're going to make it far next year. I'm going to talk about Riley and the Colts picking Riley. I like Riley. I think at least he's 6'4", big dude, super athletic, wants to learn, didn't pull a Shedeur Sanders ever. You never see him saying Shedeur Sanders type stuff. I'm not hating on Shedeur, but I think modern day athletes really have to understand something, and that is that as an athlete you are working for somebody, or you have a job. And if you go, like, I couldn't imagine any employee going into a position and saying, I don't care how talented the employee is, if the talented employee says you're going to change your culture for me, or you should want to change your culture. I think what he was trying to say is, and I don't know, I don't want to speak for him, but I think what he was trying to say is, look, I want to win. If you're struggling to win right now, I really do think I could take you to that next level. And that hits different. It's worded differently. Most importantly, it shows a little bit of respect for the employer. I think I see too many athletes like Anthony Davis getting on Sham's podcast or whatever and saying, I think we need a 5. I thought it was known within the organization. That's why he said it. And they're just trying to find one. He surprised Jeannie Buss. Why do these athletes do that? So if I was an athlete, and maybe they don't have anybody to talk to them about, hey, how do you be a good employee? How is it that you want to come off to your other coworkers or teammates to be a good employee? It's like John Morant. It's like doing all this, this gun stuff, and he keeps doing it. He can't stop. Yeah, I don't know how else to say it. Even as an athlete, you're an employee, and that goes to Luka as well. in terms of if your employer is doing certain things and taking your beer away, doing certain things, and you see the signs on the wall, you might want to talk to someone about it or try to get ahead of it. But Lucas seemed very shocked, and I'm sad for him that he got traded. And I think part of it, he's got a very fiery personality, very fiery personality. Um, it's a star. It's a star personality almost. And again, it goes back to reading the room. I personally think Nico and him probably an ego clash. Because if you go in there and you're yelling and you're demonstrative and you're always talking to the refs and having a star attitude, I think certain people and cities can handle that, and certain managers can handle that. Like even if you're the best, if you keep saying I'm the best, a manager who's managing you may not think so, and actually may not like it, and they'll take it out on you somehow simply because they don't like it. And I think that's what happened with Nico. Nico's got an ego. I think Luca Pi rubbed him the wrong way with his star attitude. He has a very star-like attitude or whatever. Some may call it a bad attitude. I think he wants to win. It's a winning. He has a strong, burning desire to win, kind of like Jimmy Butler. Aside from the weight issues or whatever was reported to justify the trade, I think the not spoke about thing is an ego issue. I think probably their egos clashed. Nico's probably like, you're not going to outshine me. I don't care how good you are. I worked with Kobe. I know what a Kobe looks like. You're not Kobe. So I think it became an ego thing because all indications point to it was Nico Harrison's decision. And think about who he traded for. He traded for like Tim Duncan. Anthony Davis is like Tim Duncan #2. So it's one of those things where, and that's my hot take on that one. I think it was an ego clash. They wanted a quiet or Tim Duncan type personality, and that's Anthony Davis, someone who Nico could get along with better. And so why Mark Cuban keeps getting frustrated or flustered when the crowd's chanting fire Nico, we haven't heard ownership come down and say, hey, it was my idea. I approved this. It's on me. It's on ownership. They actually said we weren't even aware of how important Luka was to the fan base. And Nico apparently wasn't aware. So anyway, Nico did this by himself. They trusted Nico. They didn't even talk to Mark Cuban. Nico didn't even talk to Mark Cuban. So I think part of it was he saw it as his chance to get rid of an ego he can't stand. And honestly, I think it was a mistake. Luka is a generational talent. Anthony Davis is not an MVP caliber player. Even if he is, he's not a reliable player. So I think it was a bad trade. Yes, the Lakers may be eliminated this year, but they weren't going very far with Anthony Davis. I think that was a mistake on Anthony Davis's part. Again, airing your grievances in the public instead of like behind closed doors. It's just like basic stuff. I'm like, where do these athletes get their training sort of just to be a good employee? How do you be a good employee? There's got to be some way to learn besides just getting traded or losing tens of millions, or in Luka's case, I don't know how much he lost, but he bought a house. Dude was crying. So I hate to see it. I mean, in addition to financial literacy, though, in addition to public relations with the media, I really do think some of these athletes should take a course on how to like be a good employee, and what it means to be an employee. Like, what does that actually mean? If beforehand you're telling employers, hey, I don't want to work for you, and you're saying that publicly, like Shedeur did, or coming off like, I don't want to work for you, I'm too good for you. A lot of employers are going to wonder if you're too good for them as well. Riley's pick, the Colts, kind of surprised a lot of people, but I find it funny, like, people are so recent focused. Like the Will Howard pick, everybody's like, yeah, rah, rah. And I think he's good, but I think he's going to be good for the Steelers, by the way. But he had 15 draft picks around him. That doesn't include the other half, the freshman wide receiver and all this. I mean, if you have an all-star football team around you, you're going to look pretty great. Ohio State had an all-star squad, and I hate to say it because, I was there at the game. I was rooting for my team, Notre Dame, but they had a lot of weapons. They had so many weapons. It was incredible. Wide receivers. Judkins, nobody was talking about him, and all of a sudden his draft stock goes through the roof. I mean, and that wasn't even their main guy, their main running back for a long time. And Judkins, he was a transfer, and he I don't know, played probably one of his best games ever that game. But that was how stacked that team was, for perspective. And so I was very impressed with Riley. I don't know how we're going to replace Riley. But I will say this, Jeremiah Love is an exciting running back. If we get him the protection he needs, he's gonna tear through people. He's gonna really do well next year. Jaden Greathouse is an incredible receiver. We need to get him the ball. We need to get him the ball because he is a star. He did it in a couple games, in like big games. And well, why we ever went away from Jaden ever is I don't know why we would ever forget about him again. Let's just say, because he continued to make big plays even in the national championship game. So I'm glad to see him back, and I'm very excited for Notre Dame football next year. Very glad I got to make to the national championship game. This was a longer podcast, obviously, because I haven't been able to update for a long time. But after tax season, I've kind of got a little bit of not free time, but some time to. I think it's high time. I think it's the right time, the appropriate time to kind of get my thoughts out there and try to calm people if they're feeling panicked, and talk about other stuff, exciting stuff, sports-wise on my mind as well. Thank you, everybody, for listening. If you haven't, please like. It always helps to subscribe, so when I obviously post new things, you'll see it. Open the feedback in the comments as well. Thanks so much.